Hey everybody, it's Michael Wagner here at Omnia Family Wealth. I want to thank you as always for taking a few minutes out of your busy day to sit down with me as we consider the source. Now, I've been getting a lot of questions recently about private equity. This can happen when you see markets run up a lot. People start to look at other sources of return. Versus public equity, what makes private equity different is that it's privately held, right? But what that means is that you don't have an easy exit strategy. You can't just go online and sell your private equity investment and get the money for it the same way that you would if you were in a public stock. So there's this illiquidity risk that goes along with investing in these vehicles. Of course, because you're giving up some of that access to capital, you should expect a higher return. But what I really want to drive home is that these are very sophisticated investments and they're not always for everybody. There are a couple of regulatory levels where you can qualify for these investments. The first and lower one is the accredited investor status. There's two ways to qualify as an accredited investor. First, on income. If you file your taxes as a sole individual, that's a $200,000 annual income qualification. That would be last year in addition to this year, with the expectation of that continuing into the future. If you do file jointly, that's a $300,000 income level. You can also qualify based on your net worth. And for an accredited investor, that's having a net worth in excess of $2 million. There are a couple of other ways to qualify as an accredited investor. If you're curious, I do recommend you reach out to a financial advisor. The next level of qualification up is what's known as a qualified purchaser. This is solely a net worth qualification. This math does exclude your primary residence and any business assets. So a qualified purchaser has a net worth, with those caveats, in excess of $5 million. The thinking behind these levels and really having to qualify to go into things like private equity is that because of this illiquidity risk, the concern is people getting into assets that they can't easily unwind should they need those funds in an emergency. So it's really important as you are reviewing these investments that you think about what your budget for illiquidity is. And I really, really would encourage you to have that conversation with a financial advisor who can help you understand the inner workings and help you map out and really help you determine what your appetite for illiquidity may be. So it's a brief overview on why private equity may make sense in a portfolio, things you need to be concerned about in terms of going into an investments like that, as well as determining whether or not you qualify as an investor in those investments. So, as always, thank you for your time today. I really look forward to hearing any feedback, questions, or comments that you may have. You can reach out via email, give me a phone call. Thank you again for taking a few minutes out of your day as we sit down, consider the source. Have a great day.